Hello everyone, this is Dan Gramza and welcome to Gramza Market Studies for Friday, January 16th. We had some downward pressure in the NASDAQ market. As you can see here, we had some earnings reports. We had a number of fundamental reports that came out that put some downward pressure, plus some news out of Europe, which we'll talk about in just a minute. That downward pressure did cause some movement here in the NASDAQ market to lower prices. I'm not looking for a dramatic move down in today's action. I'm looking for an unchanged to lower. In other words, I'm looking for a bounce as we go into Friday's close. Let's move on though and take a look at those currencies. And you can see here in the euro we had some downward pressure in that market, and what was causing that was what happened here in the Swissy. No, those are not bad prices. That's reality, and it goes back to what the central bank did in Switzerland. And what they basically did is they eliminated a barrier of 120 Swissies to the euro. And what did that do? It caused a tremendous move to the upside, reverberated throughout the marketplace. And what you're looking at here, here's that bearish level, and here's the bullish level. The difference between that bearish and bullish level, because the market did trade through that bullish level, is $5,400 per contract. That would be the value of change for that market move. Now let's move on though and take a look at the Canadian dollar. Canadian dollar also traded above its bullish level, and the difference between the bearish and bullish level in the Canadian dollar, that market is $1,530. To give you an idea of that magnitude of change. If we move on over to interest rates, the notes did go higher. Well, that makes sense when we think about the stock market. I'm very leery of this market at these levels, so I think we should be cautious going into Friday's session about further movement to the upside. Gold also finally had an excuse to do something. As we've talked about in the past, I'm longer term. I am bullish on this market, and it does need a reason to do something. The issue is it's sustainable, but right now we're looking for an unchanged to higher move in that market. Copper traded above its bullish level. The difference between the bearish level and the bullish level in that market is $4,000 per contract, and we're looking for a sideways move there in today's action. Crude oil also traded above its bullish level by 17 cents. The difference between the bearish and bullish level in that market is $24,300 per contract. So that's a magnitude change between those two levels. And what are we looking for? Continued downward pressure. I just don't see a strong reason for a rally in that market. Soybeans also continues lower as sellers stay dominant in that market. Not looking for a dramatic move down, but continued downward pressure in that market, unchanged to lower. If we look at corn, on the other hand, it did trade above its bullish level for a while, and the difference between the bearish and bullish level in that market is $700 per contract, and we're looking for a sideways move for Friday's action for our friend Mr. Corn. That concludes the day's market studies. Thank you for being with me. I'm looking forward to being with you again, and in the meantime, take care.